Hey everyone, and welcome back to Investing Talk podcast. Today, we're going to be looking at Interactive Strength, TRNR.
Okay.
This company's been making waves in the fitness tech space,
Yeah.
but their stock price has been, well, kind of like a roller coaster lately.
It has been a roller coaster ride, and what makes it even more interesting is this whole sector is transforming so rapidly. The pandemic really shifted how people think about fitness now.
Yeah.
Home workout solutions are booming,
Especially the ones with, like a tech edge.
especially the high-tech ones. Yeah.
So is this company the next Peloton, or are there like warning signs we should be seeing? Let's get into it.
Let's dive in.
Okay, so Interactive Strength recently acquired Sportstech,
Right.
which is a German fitness equipment company.
Hmm.
The deal was for $15 million, and it was an all-stock deal.
Yeah, that's right. And that all-stock aspect, always gets investors a little scrutinizing a bit more because it can dilute the value of those existing shares. What was really curious is the stock actually dipped more than 13% the day the acquisition was announced.
Huh. It does make you wonder what the market was thinking. Because on one hand, you have this huge potential revenue boost,
Right.
but on the other hand, you have investors being kind of hesitant.
Yeah, and it really points to this pattern we've seen with TRNR,
Yeah.
that buy the rumor, sell the news phenomenon. Maybe investor expectations were already baked in, or maybe there's some skepticism about their ability to actually execute on these plans.
Yeah, so they're getting punished for like actually following through on what they said they were going to do.
It seems that way.
That's pretty interesting. Now, to add another layer to this, they then announced a major order from Germany for their CLMBR product, which is their flagship climbing machine.
Right, and you would think that kind of positive news would send the stock soaring, which it did. Briefly.
Briefly.
It jumped over 30%.
Wow, over 30%.
But then the very next day dropped again.
Oh my gosh, it really is like trying to ride a bull.
Exactly. And part of that is due to TRNR having a low float, meaning there are not that many shares available for trading.
Oh, okay.
And for our listeners out there, a low float basically amplifies both positive and negative news,
Okay.
which can lead to those dramatic price fluctuations.
So if you like a wild ride, this stock might be for you.
Maybe.
But all jokes aside, Interactive Strength's revenue growth is pretty hard to ignore. They saw a 586%
Wow.
year-over-year increase in Q3 of 2024.
Absolutely. Those numbers are eye-catching, and I think their focus on this niche high-intensity equipment like the CLMBR could give them a real edge in this market. It's getting crowded out there.
Yeah.
But it's smart to differentiate themselves from those more general fitness brands like Peloton.
Speaking of Peloton, I'm curious about the CLMBR. It's not your average treadmill or like stationary bike, right?
Yeah.
What makes it stand out?
It's definitely a unique product, and they're targeting a very specific segment of the fitness market.
Okay.
Those who are looking for high-intensity but low-impact workouts. It offers a full-body workout that engages multiple muscle groups. And I think that niche focus could be a key differentiator for them, especially as they expand globally.
So it sounds like they're really trying to carve out their own space.
Exactly.
Within this fitness tech world.
And it's interesting to note that recent CLMBR order from Germany came shortly after the Sportstech acquisition.
Oh.
So that could be an early sign that they're already seeing some synergy there, leveraging Sportstech's existing network to generate sales for the CLMBR.
That would be a very positive sign for investors who are a little bit concerned about the integration of the two companies.
Yeah.
Speaking of concerns, what are some challenges that they might face moving forward? We talked about the volatility a little bit, but what else should investors be aware of?
I think one of the biggest challenges for any company in this space is staying ahead of the curve.
Yeah.
Technology changes. Consumer expectations change. You got to keep up.
Got to innovate.
Exactly. Interactive Strength needs to make sure their products remain cutting edge if they want to stay competitive.
Yeah, we've seen what happens to companies that fail to innovate. Think about those workout DVDs everybody used to have.
Yeah.
They're practically relics now.
Replaced by streaming services and interactive apps.
Exactly. So staying ahead in that tech game is crucial for them.
Yeah.
What about the economic climate, though? We're seeing inflation. There's talk of a potential recession. All these factors could affect consumer spending.
Yeah. And particularly on things that might be seen as non-essential, like fitness equipment.
Right.
So they have to be prepared for that.
They have to be adaptable.
Absolutely. They might need to adjust pricing, explore new markets, or even just double down on their marketing efforts to attract customers when money's a bit tighter.
It sounds like adaptability is key in this market. But before we get ahead of ourselves, let's take a step back and really break down this Sportstech acquisition. What were like the key details and what does it signal about Interactive Strength's overall strategy?
Okay, let's dissect this. So they paid $15 million for Sportstech, all through stock issuance. So that's important because it impacts existing shareholders through dilution.
And just to clarify for our listeners, dilution means that each existing share represents a slightly smaller piece of the company.
Exactly. Now, Sportstech is well established in the European fitness market,
Yep.
generating over $40 million annually. And crucially, they're already profitable.
Oh, wow.
So Interactive Strength is gaining access to a new market, a proven revenue stream, and immediate profitability.
That sounds like a pretty strategic move.
No.
It seems like they're aiming to become a global player in the fitness tech space, not just a North American one.
That's a sharp observation, and you're right, it aligns with the growth potential in the European market. Fitness tech is still relatively new there compared to North America, so there's a lot of room for expansion.
So this acquisition could be a way for them to get a strong foothold in Europe before it gets too crowded.
Exactly, and by acquiring a company that's already profitable, they're mitigating some of the risk that comes with entering a new market.
That's a smart move.
Yeah.
But of course, no acquisition is without its risks. Integrating two companies, especially ones operating in different countries, always presents challenges.
Absolutely. There are always cultural differences, logistical hurdles, and even potential clashes in management styles. It's a complex process, and for Interactive Strength, the stakes are higher because their projected revenue growth hinges on the success of this integration.
So if they can pull it off, it could be huge.
Yeah.
But if the integration stumbles,
Yeah,
it could really impact their growth.
for sure.
So as investors, we got to keep an eye on how this all plays out.
Couldn't agree more. It'll be fascinating to see how they navigate these challenges and deliver on those promises.
Well, let's move on to another big piece of news that caused a stir with the stock, that major CLMBR order from Germany. What are your thoughts on that?
Well, it's a repeat order, which is always a good sign.
Okay.
It means that the customers are satisfied with the product. They're coming back for more. And it came shortly after they announced the Sportstech acquisition.
Right.
So it suggests that there's some synergy there. Maybe they're already using that network to generate sales.
Like a sneak peek into the potential of what this acquisition could bring.
Exactly. And if they can demonstrate that they're effectively leveraging that infrastructure and those distribution channels, it could alleviate some of the market's concerns.
That makes sense.
Yeah.
Now, shifting gears a little bit, let's talk about some potential risks of investing in Interactive Strength. We've touched on a few already, but are there any others that stand out to you?
I think besides those challenges of integrating and staying innovative, another key risk is competition. This space is getting crowded.
Oh, yeah.
You've got players like Peloton, Nordic Trek, Mirror, all vying for that market share.
So Interactive Strength isn't operating in a vacuum. They really need to stand out from the crowd.
They do, and they need to capture that market share, which is tough in a market that's becoming more and more saturated.
Absolutely. They need to constantly innovate, come up with new and exciting products that appeal to a wide range of consumers. And they need to do all this while managing costs and, striving for profitability, which they haven't really consistently achieved yet.
That's right. And that brings up their financials.
Yeah.
I mean, their revenue growth has been phenomenal.
Yeah, it has.
But profitability is still something they're working towards. Is that a major red flag? I think it's definitely something to consider. High growth often comes at the expense of profitability, especially in those early stages. They're investing heavily in expansion marketing, product development.
Yeah.
All of that can strain the bottom line.
So it's not necessarily a deal breaker, but investors really need to look at the bigger picture.
Absolutely.
And assess whether the company is on a path towards profitability. Are they reducing costs? Are they improving efficiency? Are they growing that customer base?
Exactly. And that's where things get a bit tricky with TRNR. I mean, they're clearly ambitious. Pursuing this aggressive acquisition strategy, but successfully executing those and ultimately achieving profitability will be key to their long-term success.
It's a delicate balancing act, for sure.
It is.
They need to keep that growth momentum going, but they also need to show that they can turn a profit. And then, of course, there's that volatility we talked about earlier.
Right. Is that something that should make investors nervous?
I think it depends on your individual style and risk tolerance.
If you don't like roller coasters.
This one might not be for you.
Maybe sit this one out.
But for those who are a bit more adventurous and who believe in the long-term potential of the fitness tech sector, this could be an interesting play.
It seems like their acquisition of Sportstech is a pretty big bet on that future.
Yeah.
But before we jump to any conclusions, Let's dive a little deeper into the details of that deal. What were the specific terms, and what does it tell us about their overall strategy?
All right, so let's break it down. They acquired Sportstech for $15 million entirely in stock.
So that means they issued new shares, which led to that dilution we talked about earlier.
Right.
Now, Sportstech is well established in the European market, over $40 million in annual revenue. And again, importantly, they're already profitable.
So they're getting access to a new market, a proven revenue stream, and immediate profitability.
Exactly.
It seems like a strategic move to really bolster their global presence, especially since the European market for fitness tech is still relatively untapped compared to North America.
Precisely. They're positioning themselves for growth in a region with huge potential. And by acquiring a company that's already profitable, they're adding a level of stability to their operations.
It's a smart approach, but we know acquisitions come with their own set of challenges.
Oh, for sure.
Integrating two companies, especially across borders, can be really complex. You've got those cultural differences, logistical hurdles, and even clashes in management styles. How do you see these challenges playing out for Interactive Strength?
Yeah, you're absolutely right. Those challenges are very real. And for them, the stakes are even higher because their projected growth relies heavily on the success of this integration.
Right.
If they can seamlessly integrate Sportstech and leverage their existing infrastructure, they have a real shot at hitting those ambitious targets. But if it stumbles, it could create a drag on their growth.
So it's a high-risk, high-reward scenario.
Yeah.
And as we've seen, the market has reacted pretty strongly to both the positive and the negative news surrounding this acquisition. Investors are clearly watching closely, weighing that potential upside against the risks.
Absolutely. And their success is going to depend on their ability to navigate those complexities and execute effectively.
Time will tell
It will.
whether they can rise to the occasion.
And it's important to remember they're operating in a landscape that's evolving really rapidly. The fitness tech world is getting more competitive.
Oh yeah, for sure. It's not just Peloton anymore.
No, it's not.
You've got companies like Nordic Trek, Mirror, Echelon all vying for a piece of that fitness pie.
Exactly. And each of them is bringing something different to the table. Whether it's the equipment, the workout programs, or the tech features.
So Interactive Strength has got to be on their toes,
Yeah.
constantly innovating and finding ways to stand out.
Mm.
Their CLMBR product seems to be like their key differentiator, at least for now.
It is a very unique piece of equipment.
Yeah.
Offers that full body, high intensity, but low impact workout.
Yeah.
And that's a combination that can appeal to a lot of different users.
Yeah.
From serious athletes to people just starting out.
And let's be honest,
Yeah.
it takes up less space than a treadmill or an elliptical.
That's a good point, especially for smaller spaces.
Right.
Yeah, it seems like they found a good niche with the CLMBR,
Yeah.
but the challenge is going to be keeping it appealing in a market that's constantly being flooded with new gadgets.
Yeah, it's a fast-paced industry.
It is.
Consumer tastes change quickly.
They do.
Interactive Strength's got to anticipate those changes and stay ahead.
Absolutely. And that's
Yeah.
going to require a lot of investment in research and development. It'll be interesting to see what they come up with in the coming years.
Yeah, maybe they'll even expand beyond the CLMBR. Offer a more diversified product line.
Yeah, maybe.
Now let's talk about their financials for a second. We keep highlighting this impressive revenue growth,
Right,
but we know they haven't consistently turned a profit.
right.
How should investors be interpreting this? Is it a cause for concern?
I think it's definitely something to consider, but not necessarily a deal breaker.
Okay.
High growth often comes with these upfront investments that impact profitability,
Especially in the early stages.
especially early on.
Yeah.
Yeah, they're putting resources into expansion marketing, product development
Right.
that can all put a dent in the bottom line in the short term.
So it's not just about looking at if they're profitable today, but more about understanding, are they on a trajectory towards profitability?
Exactly. Are they making progress? Reducing costs, improving their efficiency, building up that customer base.
Yeah, those are all good signs.
Crucial indicators.
What about their debt situation? They acquired Sportstech for $15 million.
Right.
That must have added to their debt load.
It did. Investors should definitely scrutinize that balance sheet,
Yeah.
see how much debt they're carrying and how that might impact future earnings. Too much debt can be a real burden, but, strategically used debt can be a tool for growth.
It's all about balance.
It's all about finding that sweet spot.
Now let's talk about the people behind the numbers, the management team. Who are the key players at Interactive Strength, and what's their track record like?
Well, the CEO's name has a background in CEO's background.
Okay.
So they bring a wealth of experience to the role. They've been at the helm for number years
Right.
and have overseen this impressive growth.
That's a good sign.
Uh,
It shows they really understand the business. But what about the rest of the leadership team? Do they have the experience to navigate these challenges?
That's the key question.
Yeah.
You want a team that's not only capable but aligned in terms of their vision and their strategy. A cohesive and experienced leadership team can make or break a company's ability to execute.
It's like a sports team.
Exactly.
You need the talent, but you also need them to work well together.
You need the teamwork. A strong management team can be a decisive factor in a company's success.
Especially in an industry like fitness tech.
Absolutely. They have to adapt quickly to market changes, anticipate consumer trends, make strategic decisions that keep them ahead.
And let's not forget about that volatility of their stock price.
Oh, right.
We've seen some big swings lately.
We have.
What's driving that? And should investors be concerned?
Well, as we discussed earlier, the low float is a big factor.
Okay.
With fewer shares, even small orders can impact the price.
Right, like a seesaw,
Exactly.
with only a few people on each side.
And that inherent volatility is compounded by the fact that this whole sector is pretty speculative.
Yeah, investors are betting on future growth potential. And that can lead to those wild swings based on news rumors, even just sentiment.
It can. It's a high-risk, high-reward environment.
For sure. So for those who are risk-averse,
Yeah.
you mean not the best fit.
Probably not. But for those who can handle the roller coaster and believe in that long-term potential,
Yeah.
it can be an opportunity.
So it really comes down to understanding your risk tolerance.
Absolutely.
Now let's put on our analyst hats and talk about some key metrics investors should be considering when they're evaluating Interactive strength. What are the numbers that matter most?
I think revenue growth is a big one.
Of course, we've talked about that.
And I have.
They've shown impressive growth so far.
They have.
But the question is, can they keep it up?
Right. Can they keep attracting new customers?
Yeah, are they expanding into those new markets?
Exactly.
Yeah.
Past performance doesn't guarantee future results.
Hmm.
Investors need to look at, is this growth driven by real demand?
Yeah.
Or is it just hype?
Right.
Another important metric is gross margin.
Okay, and what does that tell us?
So that tells us how much profit they're making on each product after you account for the cost of goods sold.
Yeah.
A healthy gross margin means they're pricing things effectively and managing those production costs.
So it shows they have room to invest in growth and innovation without, sacrificing profitability.
Exactly.
What about their operating expenses?
Right. Are they managing costs effectively as they grow?
Yeah.
That's another crucial area to look at. Expenses can eat into profits quickly, even if revenue is strong. Investors want to see them keeping those costs in check.
It's finding that balance, right?
It is.
Investing in growth while staying lean and efficient.
Exactly. Now, beyond those core metrics, cash flow is always king.
Cash flow is king.
It really is. It's the lifeblood of any company.
Yeah.
Investors want to see that they have enough money coming in to cover those expenses, invest in future growth, and maybe even return some value to shareholders through things like dividends.
Right. Cash flow is the ultimate measure of a company's financial health.
It really is.
It shows if they're actually making money, not just generating revenue.
Right.
And finally, we can't forget about valuation.
Valuation.
Is the stock price justified?
Right. Is it justified based on their performance and future prospects?
And how do you even figure that out?
Well, that's where things get tricky, especially with growth stocks. They're often priced at a premium, reflecting that optimism about their future.
But that optimism can fade quickly.
It can if they don't deliver.
Right.
So investors have to strike that balance between recognizing the potential,
Right.
but not overpaying for it.
So it's about assessing if the current stock price reflects the company's true value
Exactly.
and factoring in that risk.
Exactly. It's a delicate dance that requires analysis and a good understanding of their fundamentals.
And the broader market dynamics.
Absolutely. It's a good reminder that investing is not just about trends or chasing those hot stocks.
Oh,
It's about making informed decisions.
well said. Now let's zoom out a bit and talk about that bigger picture, the fitness tech landscape as a whole. What are some key trends shaping this industry, and how is Interactive strength positioned within all of this?
One of the biggest trends, and we've touched on it, is the rise of home fitness.
Yeah,
The pandemic really accelerated that.
it did.
And even though gyms have reopened,
Right.
people have embraced that convenience and flexibility of working out at home,
Makes sense.
on their own time. No commute, no crowds.
And technology has been a huge part of that, right?
Huge, making those workouts more engaging and effective.
Yeah, you've got all these connected devices,
Yes.
streaming services, apps.
Personalized workouts, tracking your progress.
It's almost like having a trainer in your living room.
It is, and this trend's only going to continue.
Right.
I think as technology advances, we can expect even more immersive experiences.
Blending the physical and digital.
Right, blurring the lines between working out at home and going to the gym.
Yeah. It's exciting to think about the possibilities.
It is.
For companies like Interactive Strength, it's a big opportunity.
It is.
But they got to stay ahead of the curve.
They do.
They got to keep innovating to keep consumers engaged.
Absolutely. They can't just sit back. They need to be experimenting, trying new things and pushing those boundaries. And they have to do all of that while navigating a complex and competitive landscape.
Yeah, it's a tall order, but if they can pull it off,
Right.
they have the potential to be a real player.
They do, I agree. And it's not just about the technology. It's about understanding those consumer needs, creating products and services that meet those needs.
It's got to be a seamless and enjoyable experience.
It does.
That makes people want to come back for more.
Exactly. That's where that intersection of technology, fitness, and user experience becomes so important.
Yeah, the companies that can master that.
They'll be the ones that thrive.
Well said. Now, speaking of competition, we've talked about Peloton a bit.
Yeah.
They're the leader in this space.
They are.
But how does Interactive Strength stack up?
Mm-hmm.
Are they a direct competitor, or are they going after a different part of the market?
I think they both operate in that sector, but their approaches are different. Peloton, is known for those bikes and treadmills.
Yeah.
Their live classes.
Right.
They've built a very strong brand and a loyal following.
Yeah.
They appeal to a more affluent demographic,
Right.
people willing to pay a premium.
Interactive Psych, on the other hand, they've got that CLMBR
Right.
targeting people who want that high-intensity but low-impact workout.
Exactly.
They're not trying to be everything to everyone.
No, they're focusing on doing one thing really well.
And that could be a key differentiator for them.
It could, especially as they grow.
Especially as they go global.
Yeah, they're not directly competing with Peloton on every product.
Right.
But there's some overlap in their audience and their overall mission.
Yeah, to bring fitness into the home.
Right.
I wonder how this is all going to play out.
Yeah.
Will Interactive Strength stick to their niche or try to broaden their appeal?
That's a good question. Only time will tell.
Yeah, but one thing's for sure, the competition is going to get fiercer.
It is.
And both companies are going to have to really step it up.
They will. Now let's talk about their growth strategy.
Yeah.
They've already made that big acquisition with Sportstech.
Right. Are they going to do more acquisitions?
Yeah, or are they going to focus on organic growth?
That's a great question.
Acquisitions can be a quick way to expand.
Yeah.
You get into new markets, you get access to new technology, you can even eliminate some of the competition.
But they're not without their risks.
No, they can be risky and expensive.
So it's a strategic decision.
Absolutely.
They got to be careful.
They do. What do you think will influence their decisions? Well, they have to weigh the opportunities and the risks of each target.
Yeah.
They have to look at their own finances,
Right.
their ability to integrate these new companies, and of course it has to align with their strategy.
It's a lot to consider.
It's a complex equation.
But it's something they have to figure out if they want to keep growing.
They do. Yeah. And beyond acquisitions, they have to focus on organic growth,
Right.
which means expanding their current product line, developing new products, and growing their customer base through marketing.
Right. Organic growth is essential.
It is.
For any company that wants to be successful in the long run.
It's about building that strong foundation and a brand that people love.
Absolutely.
Yeah.
Now, speaking of reaching consumers, let's talk about their marketing strategy.
Yeah.
How are they getting the word out?
Well, social media is a big one.
Yeah, it makes sense.
They have a strong presence on Instagram, TikTok, showcasing their products.
Yeah.
Sharing workout tips, engaging with their followers.
Yeah.
It's a smart way to reach that younger audience
Right.
who are looking to social media for fitness inspiration.
It's about meeting them where they are.
Exactly.
Yeah, creating content that's relevant.
Exactly.
I've even seen their ads on my own feeds.
Yes, they're running targeted ad campaigns to reach specific demographics.
Smart.
And they're partnering with influencers and athletes
Oh, that's a good strategy.
to promote the brand and reach a wider audience.
But it's not just about buzz.
No.
It's about converting that buzz into sales.
Exactly. Brand awareness is great,
Yeah.
but it doesn't pay the bills.
Right. They need to turn those eyeballs into paying customers.
They do. And that requires a good sales strategy,
Right.
a great product, and a seamless customer experience.
It's about creating a brand that people trust.
It is. It's about building that community and fostering loyalty.
Yeah, which takes time and effort.
It does, but it's essential.
Well said.
Yeah.
Now, as we wrap up our discussion, let's recap some of the risks associated with investing in interactive strength. We've touched on a few. Are there any others that come to mind?
Well, we've talked about the integration risks.
Right. See?
The competition.
Yeah.
But another big one is the economic environment.
Oh, yeah. Things are a little uncertain right now.
A bit uncertain, yeah, with inflation, rising interest rates,
Yeah.
potential recession.
All of that could impact consumer spending.
It could, especially on things like fitness equipment.
Yeah, they need to be ready to navigate those challenges.
Absolutely. They might have to adjust their prices,
Right.
streamline their operations, maybe look at new markets.
Just to diversify their revenue streams.
Exactly.
Now, beyond the economic climate, there's also the whole regulatory landscape.
Oh, great.
This industry is still pretty new,
It is. And the regulations are constantly evolving.
so they got to stay informed.
They do.
Make sure everything you're doing complies with all the rules and regulations.
Absolutely, both here and abroad.
It's another layer of complexity
It is.
for investors to consider.
Right, and it's a good reminder that there are always risks.
Yeah.
Things outside a company's control that can impact their performance.
But risk and reward often go together.
They often do. Companies with high growth potential often carry higher risk.
So it's about finding that balance that aligns with your own goals and your risk tolerance.
Exactly. Yeah, it's always great to hear those different viewpoints.
It is. We can all learn from each other. And if you enjoyed today's episode, we encourage you to subscribe to Investing Talk Podcast.
Yes.
Share it with your friends who might be interested in fitness tech or investing.
We're here to break down those complex topics. Analyze companies and give you the information you need to make those decisions.
We believe knowledge is power,
Absolutely.
and we want to empower you to become more confident investors.
So whether you're a seasoned pro or just getting started, we invite you to join us every week.
As we explore the world of investing.
One company at a time.
Thanks for tuning in to Investing Talk Podcast.
And remember, always do your own research, invest wisely, and never stop learning.
We'll catch you on the next episode.